China, I know, has built quite a strategic reserve, and I think they use it to try and control the market. Um, there is sort of evidence that that is the case. Now, if I'm right, then there comes a point where it's absolutely pointless them throwing cheap silver onto the market to try and keep the price down. They may as well hold on to their reserves. And I think we may well be seeing that point. Now, if that's right, then the moment China is out of the market, I mean, the price, I think, should take off. So it's going to be interesting to watch.
Alasdair Macleod, seasoned gold analyst and head of research at GoldMoney, is connecting the dots, and the picture he paints is grim for the US dollar. In a recent talk, Macleod outlined how China and Russia are strategically dumping dollars and hoarding gold, preparing for a monetary future that doesn't include Washington. He argues that China has reached the point where suppressing silver prices no longer serves its interests. Once they step back from the market, expect a price explosion. But the larger threat? Foreigners are done funding U.S. deficits. With the dollar breaking down and real returns evaporating, central banks and sovereign wealth funds are shifting into gold, fast. Macleod says the U.S. is in a debt trap. Higher rates wreck the budget, but low rates crash the dollar. Either way, faith in fiat is crumbling. Now we present the latest clips of Alasdair Macleod's video. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
From the point of view of foreign investors, foreign holders of dollar assets, treasuries and corporate bonds and also equities, there's not much point in buying any more. So, given that quite a lot of government's funding has depended on foreign demand for bonds, this, I think, creates an immediate headache. And this is why Scott Bessent, I think, turned around and told Trump, look, you're going to bankrupt us if you go on this rate. So, you back off, mate. And I think that's basically the conversation that, as far as the future is concerned, I think what we've got to look at is what level of interest rate is going to encourage foreigners to hold on to dollars. Now, effectively, the foreigners will be looking at the dollar, and particularly since it's broken down against all other currencies. I mean, the trade-weighted chart looks absolutely frightful. It's broken down. They know this. The reason they've been buying gold is because they've been selling dollars. I mean, so that foreigners are already attuned to this. When I say foreigners, I mean the central banks, the sovereign wealth funds, the really big money which is close to government, which is part of the debate, if you like, in whatever country at the highest levels. They know this has been happening, so they're not going to buy. They're not going to buy unless they get a return which is commensurate with how they see the purchasing power of the dollar dropping. They're going to need it as compensation. But the problem is that the higher interest rates go, the worse it is for the US government because they're in a debt trap. And the debt trap is even more stark because as a result of President Trump's tariff policies, there is absolutely no doubt that the US economy is going into recession. And I would actually go further and say it will slump. Now, if that happens, then the tax base to cover the constant accumulation of government debt, as is, apart from the additions to it from the budget deficit, is just not going to be there. And so they are in a debt trap. The debt is accelerating faster than the ability to pay it off or to just control it, if you like. Foreigners know this. They're not stupid. And this is actually why gold appears to be rising. It's not so much gold rising, it's the dollar going down. It's foreigners getting rid of dollars. That is the key to understanding what is actually going on. So interest rates and bond yields, I think you can kiss goodbye to lower interest rates in 2025. And as soon as the markets realize this, there's going to be all hell. So that's one thing. The other thing is that you've got your own currency. And in a world which, fiat currency world, where the dollar is the reserve currency, you end up going down with the dollar unless you protect your own currency. And so that, I think, is probably the most important point as far as China, Russia, India, even, and also a plethora of countries in Africa. Um, so to protect their currencies, they have to come up with something better. And I think the only way they can do that is to go back onto some sort of metallic standard. And I think this is why, uh, um, strategically, central banks have been dumping dollars to buy gold because they know that's the way it's got to go. You've got to secure the value of your own currency. The only way to do that is to have a gold exchange standard. Now, whether they do it correctly or not, I think is too early to tell. My guess is that they won't do it correctly to begin with. They'll probably go and try and sort of do a Bretton Woods thing where they say, well, the yuan is fixed to gold at whatever price. But you plebs can't cash in your yuan for gold at the central bank. That's what's got to change, because gold has got to be used to secure the value of credit. You can't just hold on to it and say, well, I'm out of credit. I don't want credit. I'm holding on to my gold because I don't want credit. You've actually got to use it to stabilize credit. And that, I think, is eventually where China goes. I know that China has accumulated huge quantities of gold. China's been rather like Hotel California as far as gold is concerned. What goes in doesn't come out. And the people have also bought something like, I don't know, 26,000 tons, if you look at the withdrawals from the Shanghai Gold Exchange. Russia, too, she's accumulated a reasonable amount of gold at the central bank level, and she's got two sovereign wealth funds as well. And I'm informed credibly by credible sources that those sources are got another 10,000 tons approximately of gold. So, Russia can secure its ruble. And the great thing about Russia is that its economy, because it's had the luxury of exporting energy, huge quantities, the levels of private sector taxation and so on are, we can only dream about it. Would you believe 13% flat rate? Yeah. If you look at what's been happening to wages have been soaring. But what people have done is, obviously, it has had an inflationary effect. But what they've done is they've increased their savings. They've been putting, banks have been saying, we can offer you a deposit rate of 21%, which is fantastic. Inflation at the CPI level has been up about 8-10%, something like that. And the reason that it hasn't been more than that is because people are saving. This is, if you like, the bones of an economy which can very quickly switch on to a gold standard.
Macleod's conclusion is bold. A return to gold is inevitable. The BRICS bloc, led by China and Russia, is positioning for a post-dollar world, potentially backed by a metallic standard. He believes they'll fumble the first version, but the shift has begun. Meanwhile, rising gold prices aren't gold soaring. They're the dollar falling. This isn't speculation, it's strategy. Sovereign gold hoarding is the clearest signal that the current system is broken. Share your thoughts on Alasdair Macleod's analysis in the comments section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos.